You ever feel like you're unsure when you start a trade and you would like to have some confirmation before starting? Well, I got something for you. So you've already started to identify your support and your resistance, but you're still hesitating whether you should take the trade or not. And in this video, I'm going to talk about MACD or MACD. It's an indicator that can really help to confirm your entry, and that tool can be used in confluence with other signals that you have in your strategy. A MACD is basically two different moving averages which are combined, and this shows how the market is moving. It's also a sign of overbought or oversold areas. So this is great when you pair it with the overall trend. Let's get on to the charts. I'll show you how to use it. So here we are on the 5-minute charts on Euro GBP. And as always, the indicators can be used pretty much on any time frame. And the most relevant time frames would be the monthly, where you can see really the big movements and the trend will most likely be respected. But it works also on the 5 minutes. So let me show you, first of all, how to use MACD. You have to go into indicators and type in MACD. You have this one, which is the built-in from TradingView. You can save it in your favorites and add it to the chart by clicking like this. There it is under the chart. And we can see it's composed of two things. First of all, there are those moving averages. So MACD stands for moving average convergence divergence. And this means that it's basically measuring the difference between those two moving averages. And this one by default is with the 26 and 12 moving averages. But you can go into the settings and set it to any type you want. So you can also go with the 21 moving average if you would like, and have the 9 moving average to have a bit more reactive MACD. And if you want something longer, you can also put a slower length here. What this does is it changes the number of candles that the moving average is taking into account. And the less amount of candles there are, the more the moving average will respect. So as you can see, the small one here is the 9 moving average, and it's almost respecting exactly what the price is doing in terms of movements. So as we can see, the smallest one is respecting pretty much what the price is doing. But of course, this is a moving average, so it also shows when there's an excess in the market. And for example, here, the price went dropping really quickly, and then made a big difference with the moving average. Now, the second part of the indicator is this histogram here. And what this histogram is showing is what is the price doing, and it's the difference between those two moving averages. So the bigger this distance between the smaller and the slower and the faster moving averages are, the bigger this histogram will be. And there is this line here, that's the 0 line. And basically the difference between the moving averages is explaining whether the market is making an excess on one side or the other. So now you see there are two colors, the darker colors and the light colors. When it's dark, it means that the price is having an excess because the difference between the two moving averages is expanding. And when it's going lighter, it means that the moving averages are getting closer again. And then when this crosses the line, usually this can be interpreted as the end of that movement, at least. And most of the time also that's a reversal. Now, as you can see here, it indicates pretty well around here that the movement is around the middle and starts to slow down. And we still have a nice little going down still, a nice drop. But after this crosses here, the movement is just over, and then the market just consolidates, and we can see there was so much excess that we need the moving averages to just calm down before it gets back to normal. So now the moving average is the MACD is really useful when there is a big trend. But as you can see here, when it's consolidating like this, it doesn't really say anything about what the price is doing. You have those micro movements, and if you try to take trades solely based on the MACD, you will have a problem. But that's why I would recommend you just draw your supports and you just pair this together. So for example, here we have the MACD is showing a crossover of the moving averages, and then it's starting to be green, but we're still in that support zone. But when we see here that the MACD is still green and that we're just going in that out of that support, let me just zoom in a bit. On this candle, we could potentially get on the trade here, or if we want bigger confirmation here and wait for that big crossover. And then as you can see here, the crossover is really big, and it starts right at the top of the movement to just announce this retracement. And when it crosses again here, then we have another high up movement. So this is a good indication. But as you can see, it's always a little lagging. There's always 1 or 2 candles because it's based on the previous candles. It's not a leading indicator, it's a lagging indicator. So that's why you should always use it as a confirmation for your entries rather than as the signal itself. So you have to line up already the things you wanna trade based upon, and then if you need this additional confirmation, you can use the MACD. It's also much more interesting when you look at bigger time frames like the daily. Then the movements of the MACD are also much clearer most of the time, and you can see really the bigger trends here. Like it lasts for many days, and when the MACD is starting to exhaust, it's already time to consolidate for the market. So this is how to use the MACD. And as you can see here, whenever it crosses that 0 line, this means that you should be careful because there might be a reversal or at the very least a consolidation. And another thing to consider is that when there is almost no difference between the two moving averages, that means that the price is consolidating and you don't really want to be in a trade. So that's the idea. And also, the higher this crossover happens, when it's bullish, the more it will be likely to then go down strongly. And same, it's better when you wait for a crossover that happens below the 0 line to go up. Then that's usually the start of a nice movement, as we can see here. So when you see that it's all over in that area, that means that the market is probably overbought and it needs to calm down a bit. So if you see that the MACD is really exhausted, that might be not a good time to take another bullish trade, for example. So that's it for MACD. Please don't forget to subscribe to the channel, and if you have any questions, let me know in the comments. I'll be sure to reply. Leave a like if you liked the video, and I'll see you next time.